for joining us this evening. We're all on mute at the moment, apart from Greg and myself. However, as we go through this, if you have any questions, just if you'll see in your middle of your screen there, you should have a 4 or 5 green buttons at the top of the screen, and one of them is like a speech bubble question mark, like a messaging app type one. And you can click on there to chat, and you can post any questions that you like, and we can address those at the end. We're also going to open up all of the mics and the audio at the end, so there'll be plenty of time for questions. We're also going to record this session for the people that couldn't make it. But apart from that, let's get into it. We first of all have just a quick disclaimer we have to go through legally. And the main point to this is that what we're teaching here tonight is for educational purposes. This is general advice only, so it's not for your particular circumstances. And if you need to take action, you want to go and do something with this straight away, we recommend that you take independent advice. So to start off with, I just want to paint a bit of a picture as to how we got here, both Greg and myself, and what our journey's been to actually get this course and this webinar up and open to you at the moment. So I'm actually living in Sydney, Australia now, together with Greg, doing the business, but prior to this, I was in New Zealand. And through my 20s, I worked in the bank. It was what was perceived to be a great corporate job. I was climbing the ladder really quickly, and most people perceived me to be really successful. However, I had to trade a few things with that success, and one of them was actually like my soul. So I was quickly becoming, after about 6 years, the person that I didn't really want to be and that I didn't start out as. And one thing that I always had in mind when working and growing up through my years was actually that I wanted to be free one day, and I just couldn't see a path of being able to do that through the bank. So much to the dismay of my family and my partner at the time and my colleagues, I decided to just quit. And I quit the bank, and I went on a big 10-year search to try and figure out how or what I can do to create this freedom. And on my path, I started up a automotive marketing company. I started a company organizing yacht tours through Croatia and the Mediterranean, and even became a stuntman. So I was out there searching, trying to figure out what I actually wanted to do and what my passion was. And all these things had passion in them for me, but I didn't have that freedom. So as these businesses started to grow, I quickly started to find that, well, I actually had less pay, I had less time, and I had additional, like all this responsibility to take on board with the businesses. And I was fortunate enough that Greg, after 10 years, started mentioning the options thing to me. And I couldn't believe it. And at first I wasn't really listening, but the thing that really caught me was, to be honest, how much he was earning from it and what he had done for his family and his friends. And so I bought a ticket and I went over to Aussie, and Greg just unleashed on me his 15 years of knowledge within 2 or 3 days. I was super pumped, and I went back to New Zealand, and I told my fiance at the time, Annika, about it, and Annika gave me her savings, I grabbed my savings, and I just started trading straight away, even though Greg told me to virtual trade. So that's something that you can do and that we recommend, that you can virtual trade while you're learning. But instead, I just put everything in and went for it. And after 6 months, I'd lost half of not just my savings, but Annika's savings as well. And I booked a ticket back to Aussie, and Greg took me through everything, and we figured out what had actually gone wrong. And I'd gone off course. And that was because we didn't have a course. And so that's what Greg then approached me with. He said, hey, how about we build a course so that we make sure that anyone we teach from now on actually gets it, and the same thing doesn't happen to them that happens to myself. And so, fortunately enough, my wife, Annika, backed me, and she understood at this point the maths behind the options, and that you could actually not just generate this income, but you could protect your investments. And that was obviously one thing that I wasn't doing through it, but also the little time that it took to do this. You know, we saw the potential, and so we moved country, and we came over to learn more, to get better, and to teach this. And over that period, through creating this course, obviously, I sorted out all my own trading, and now I've not just recuperated those losses, but last year I managed to actually double my investment in there. So it's pretty powerful stuff, and you're going to see that we're super pumped to deliver this to you. We are going to give you 110% of our energy, and the only thing we ask through this call is that you guys really just keep an open mind, and you've invested the time to be here, so just give us 110% back and just really, be active and take note of what's being said here. It really is, has the potential to be transformational. what happened after that is Greg and I started to extract everything from his mind. We started to create this course. We had 9 people in Sydney, and we took everyone through that, and we refined the course. And then we had some people from Japan and New Zealand fly over for a 2-day workshop, a condensed version, and we refined the course again. And this is over like a 2-year period. And then we had an international webinar where we had 30 to 40 people over the course of 5 weeks attend that, and we refined the course again. And we were just about to launch and put this out there about 9 months ago, and then we came across a course on building courses. So we spent $6,000 to go and do this, to check this out, thinking that, hey, maybe we can make our course even better. But in actual fact, we realized that, hey, we actually needed to deconstruct the whole thing, reconstruct it again. And so to get into this point in time now, it's taken a lot longer than we ever thought. But what we've got here is better than we could have ever imagined. Now, I'm not going to take you through the details. I'm going to leave that to Greg because he's the one who originally taught me. And he's the one that we call the Grandmaster. We nicknamed Greg Grandmaster Greg. And you'll see why as he starts to present the stuff to you. Now, he's been doing this for 15 years, like I mentioned earlier. And this particular strategy he's been doing for 11 years. And this is what he's been doing day in, day out, and he's shared with his friends and his family and with you guys tonight. So I have to thank Greg on this call now. It's my little moment where I get to do that because, yeah, thank you, Cuz, for teaching myself and Annika. Greg is actually a legend. You know, he could be with his wife and 3 kids now, and he could be just doing this for himself. But instead, he's taken the time to actually share this and to pass it on to as many people as possible. And that's his actual passion, his purpose, is to reach, teach, and inspire as many people as possible. So I'm going to pass you on to the Grandmaster himself now, otherwise known as Greg Yellis.
Thanks, Cuz. So, yeah, no, I appreciate the props, and it is my passion, absolutely. And I guess before I get straight into it, I just want to, the reason you guys are on this call is, you know, I learned a secret that the big banks have been doing with our money since 1973. And I felt it wasn't fair that only the big banks have this secret. Why didn't everyone know this? You know, when I learned this, I was like, why didn't I know this before? And so definitely my mission is if you're on this call to learn how to generate 2 to 4% cash flow per month by using the stocks in the stock market, then you're in the right place. But I want you to ask yourself a few questions before we get into this, because each and every one of you, either on this call or listening to the recording, may be in a different place. So where are you now? You know, are you really young? You've just got into the job market, you're aggressive, you're saving some money, but you really want to invest, and you've got a high risk, high reward appetite. And you want to just absorb the knowledge and start investing your money and getting it to work for you. Or perhaps you're a dual income family or about to be a family, you know, and you're worried about how am I going to have the income to look after, you know, my child that's coming, or I want to be the primary caregiver to my child or children to come, and I can't see how I can live on one income as a family. Or perhaps you're heading closer to retirement. And again, you're thinking, well, when I stop earning this income, how am I going to get a cash flow to support my lifestyle? And I don't want to just have a mediocre lifestyle. Definitely don't want to live on a pension. And I want to generate income so that I can live a fantastic lifestyle. And so then imagine now a world where that's possible, where through a few clicks of a button, either on your phone or a laptop, from anywhere in the world, you can generate between 2 to 4% cash flow per month by using the stock market. Not only that, you can do it in under an hour a week. You know, I personally, and again, I've done a lot of time with this, but I personally manage 5 separate accounts. You know, my mum, my sister, my dad, my superannuation, my personal family trust, my personal account, a lot of accounts, and I probably spend about half an hour a week. But again, I know what I'm doing, so, you know, I can do things quite effectively. But this strategy is powerful. It's simple. And when used correctly, it can absolutely change the way you see how you can generate money. And so the time is now, and you're on this call and you're giving your time, and your time is the number one asset. And so we're not going to use that lightly. We're going to be sharing a lot of value on this call. You know, this is a free 90-minute presentation. Yes, sure, there are things post this, but with this presentation, there's going to be so much information and value that I think if you just captured this, you can be well on your way to being super successful. Well, before we get started, I want to share and answer a little bit about it, about the story, how I got here. Early 2000s, I was fortunate enough that my dad brought me into a seminar called Born Rich. And as part of that, it was about $10,000 seminar. And as part of that, there was an options trading course. And that was my first introduction to options. I did that for about 5 or 6 years, but I was on what I call the gambling side of the house. And I'll share a bit about what that is later on. But I quickly began to realize the power of options. But it wasn't until 2008, and I'm sitting in the Sydney Entertainment Centre, which is no longer here. I'm in the middle of the entertainment centre. I'm at this Robert Kiyosaki seminar, and he was one of my mentors. I read his book, Rich Dad, Poor Dad, changed my mindset on how to generate wealth. And this guest speaker of his comes up on stage. His name's Peter Spann. He was this big dude, glasses, sandy kind of coloured hair, really Aussie accent. I'm going to try and do my best imitation here, but he got up on stage, and I felt like he was just talking to me. And he's like, how many of you own property? Put your hands up. And then everyone put their hands up for property. And he's like, how many of you are renting them out, those investment properties? And pretty much everyone that had put their hand up, put it up again, because you don't leave property empty, right? And then he said, how many of you own stocks? And again, I looked around. I owned some stocks and shares, and I was like, I put my hand up. And a lot of people did. And then he said, how many of you are renting out your stocks, just like you do your investment properties? Keep your hand up. And pretty much everyone put their hand down. And now I was in. I was like hooked. I'm like, how the hell do you generate cash flow in stocks like you do property? I couldn't get it. And then he went through a similar kind of 90-minute presentation I'm covering here. I think ours is a bit different and refined, and times have changed a long time ago. But that was it. I was hooked. Did his course. Invested in more courses. Started doing it. And then it got to a stage, a couple of years ago where, I'd helped my mum, my dad, my sister, some friends, some family. And I was spending a lot of time, outside of the day job, outside doing other things. And my wife's like, you're just buzzed when you're sharing this to people. You're not just normal Greg, you're just like on fire. She goes, why don't you look to do this more? And it was like an epiphany. And that's when I engaged Ant. And as he said, we refined it and we got to where we are now. And so I'm pumped to bring this to you guys. It absolutely is my passion. And so I want to share as much as I can tonight. So let's move forward. And so I guess all of that work, it brought us to this. And this is what we call the Options for All Foundation course. And it is what we call our 6 Ps to passion. We have a firm belief that we want to get the money out of the way so people can live life on their terms. Time is the number one asset. So what we want to do is get people living that asset, living that time, how they want to do it. And that is on passion, on purpose. And to do that, we broke that down. And there are 6 key things. The first thing is path. You need a clear path on where you need to be, where you want to go. And we call it AAA to your way. We break down these 3 A's to get up a plan for you to be able to get to your path. And your path's different to mine. It's different to Ant's, different to anyone else's. And you need to understand that. And hopefully you've heard the phrase, where there's a will, there's a way. And what I mean by that is, often when you're starting something new, if times are tough or something gets difficult, you give up at the first hurdle. But if you have your mind razor sharp to the outcome you want, to the life you want to be leading, you'll smash through those obstacles. And that's what the path is there to do. Next, once you've got that clear end outcome in mind, it's about principles. You need to understand. It's like a new language. You need to understand stocks and options and the key principles to be successful. Then once you've learned that new language, then you need a plan. And again, planning is critical. And in Ready, Set, Go, we'll go through the 3 critical elements to create the right plan for you. Are you a risky person? Are you a conservative person? Do you want high return, low return, medium return? The plan is different for every single person. So we show you how to break that down, the plan that's right for you. Then it's profit, right? And this is the part I love. And this is SOAR to income. We break down the 4 key components, SOAR, to soar to our income, to soar like an eagle to those profits by generating those monthly, consistent month-to-month profits. Then once you've done these trades and you're generating those profits, it's post the trade. What do? You can't just sit there. You can't be asleep at the wheel. So we'll show you with scan positions the 4 key things to review and scan your positions to make sure if you need to adjust, if you need to manage, are you in profit, are you potentially in loss, how you can manage and adjust those. And the last and definitely not least is psychology. When it comes to investing in the stock market, you need to lead with the right mindset, LEAD, and we'll break that down as well through the course. And so, emotions and greed and fear, all those things can play a part. because one of the different things in the stock market is you get a price at any moment in time. You know exactly what that price is, whereas in property, it doesn't change very often unless you get it valued. And so you don't really know if it's up or down daily. With the stock market, you know every second. And so if you're checking that, that can have an effect on emotions, fear, greed. And so you need to be able to manage that. And so we lead with the right mindset. We go through the right psychology. Now, of course, this is the whole course, and we'll go through the details of that. We don't have time to go through everything on this call, so we're going to give you a bit of a crash course. And so where we're going to start is principles. There's some key concepts you need to understand. So we're going to do a quick crash course on understanding stocks and options before we get into the profit piece and some real life trades and examples. So the cash flow quadrant. Some of these you might have seen this before. Why do we need to invest in the first place? Well, remember we said time is number one asset? Well, you could be an employee and, you know, that's trading your time for money. And it's very, very rare for people to get financially independent or financially free in this quadrant. You're either corporate CEOs or high-flying execs or big paid actors, athletes. They're probably the only kind of employees that really do get financial freedom or financial independence because they're paid exorbitant amounts of money. But they still are trading their time for money. And if it's their passion, then go. It's great, so be it. But for the everyday person, if you were like me, you know, I taught, go to school, work hard, go to university, get a good paying job, work your butt off and retire on the government. That no longer exists. And so you need to apply in other quadrants. And so what I learned from reading Rich Dad Poor Dad early on is that you need to carve out some time to apply it in, say, the quadrants on the right-hand side. And so most people go to maybe becoming a business owner where you have systems and people at work. You're leveraging people. But again, there's a lot of skills, a lot of things involved to become a business owner. And trust us, Ed and I have known in the journey setting up this business, all the different systems, tools, tax, accreditation, everything that needed. It's not as simple as just starting a business. So the other quadrant, this is something quadrant I've been in for quite some time, nearly 2 decades now, is investing. And what I love about investing is your money is at work for you. It doesn't sleep. It doesn't eat. It doesn't whinge and complain like employees. It doesn't take time off. It doesn't get sick. It just does what you tell it to do. And that's the critical component. And so one of the mottos and options for all is you need to invest in yourself before you invest your hard-earned money in the market. Because money's pretty stupid. It does what you tell it to do. So if you don't know what to do, then you can rapidly lose it. And trust me, I've done all the mistakes, I think. I've probably got more to find out, but I've done so many of them. And we're going to share some of them tonight, some painful ones for me. But by doing the right thing, you can make that money grow while you sleep. And that's the power of investing. Again, some more things on why I should invest. And this is a graph that shows from 1986, interest rates versus inflation. And so I recently read an article and saw it recently in Australia that said our savings rates in the banks are under inflation. That means we can't save to keep up with the growth of goods and services. And so this is an alarming thing. So this is the thing where people go, work hard, save your money. Well, you're actually going backwards by doing that. By just saving your money, you're going backwards. And if you're just putting your money in a term deposit, well, not only are you going backwards, but you're locked away. And that's what those banks are using these secrets to multiply that income. So now let's go into stocks. So we're going to treat this as people have no idea about the stock market. So I'm going to go through this as simple piece by piece. But a stock is a piece of a company. It's basically they go out, they float, they IPO to be able to inject cash flow into the business, to be able to make their product or their service better and give it more access to the more market. The more money the company makes, the more valuable that piece of the company becomes. But there are also some other components around the stock market. You're buying ownership in a company. So you're actually buying a small piece in that company. You're receiving benefits from the growth in the company. So if the company grows, your share continues to grow with it. Companies' profits can also be paid out, depending on the company, through dividends. So they give a payback every quarter if they're doing dividend programs, and you get a little bit profit, again, shared back to the company. So this is another piece of cash flow every quarter through the stock market. But if we look at some investment performance comparisons, so through Australian shares, international shares, US shares, you can see over the last 40, 50 years, there's been ups, there's been downs, But overall, the US share market has well overachieved everything else. I mean, you compare it to international and Australian shares. And so it wouldn't be crazy to think, yes, that's where we focus our time and effort. We invest using this strategy on the US stock market. Not only has it had a great historical growth factor, but two, it's very high volumes. It's very liquid. Why is that important for us? Because we can get in and out of the market very quickly. Also, the trading costs, because it is such a high demand market, the trading costs are very minimal. And as part of our members and options for all, we've done some agreements with one of the world's largest brokers that trades are as little as $1 per trade. And if we do that in the Australian brokerage and in the Australian market, some of them charge anywhere for up to $30 a trade. So we're talking 30 times. That just gives you one idea why the US stock market is advantageous, we believe, and there's many others. But I also want to talk to you stocks versus ETFs because it's really important to understand there's a difference. Now, what is an ETF? It's called an exchange-traded fund. It trades just like a stock, so you can buy and sell it just like a stock you can. This is an example. Let's call it Microsoft. You can buy and sell Microsoft as a stock. But then we have what's called these exchange-traded funds, which was effectively has a bucket of groups. And so what's the difference? Well, a stock company can go up and down and or bust, right? You can lose everything. Think about Lehman Brothers back in 2008, 2009 during the GFC. They actually went bust. A massive multi-billion-dollar company went bust. ETFs can go up and down too, but really never bust because they're a group of companies. And I'm going to share one with you, which is quite, if you took nothing else away than this 90-minute presentation, is take away the ETF I'm about to share with you that comes up next. But they can never go bankrupt. So you're naturally diversified, it's more conservative, and it can spread your risk. And that's my point there. So it's natural diversification. So one of these ETFs is what's called the SPY, right? SPY. And this ETF, this exchange-traded fund, stands for the Standard & Poor's 500 companies. So this is the top 500 companies on the US market that fit into this bucket. They can be spread from industry, sector, but they're the top 500. So think about if one of those 500 went bust, well, there's 499 left. It's very, very rare that they could go bankrupt or bust. So this ETF is naturally diversified. What's even more powerful is a reference underneath there from the SPIVA US scorecard that tracked this over the 15-year period ending in December 2016, that just if you had just bought the SPY ETF, the Standard & Poor's 500, if you had just bought the SPY and held on to it, it would have outperformed between 92 and 95% of all of the fund managers out there. And fund managers are the ones that do your investing in managed funds, your superannuation account, your pension accounts. So just buying and holding the SPY and doing nothing else would have outperformed over 92 to 95% of the so-called experts out there. And what makes it even worse is that's excluding the fees these fund managers charge. Very early on, I went into fund management, and I used to have my super invested in funds. I've now taken that out. I do my own self-managed super, and I do it in these strategies I'm teaching tonight. Everything I'm teaching tonight, I do myself. For not only myself, my superannuation, but my family. So there's nothing more than I believe for myself around doing these strategies. But this statistics here should prove that to you, that forget the strategies I'm going to share. Just taking ownership and investing in the SPY ETF has proven to outperform 95% of those so-called experts. And that's excluding the fees. This gets even better later on when we layer upon these strategies, and I'll share that. But again, you have to believe me, this is a fact. This SPIVA report card is there. So one thing I would suggest to you post this call, look in your superannuation accounts. Look at the returns you've been getting over the last few years. Look at the fees you've been charged. When I did that delve several years ago, I was shocked. And now I've been doing my own superannuation account. In the first couple of years of managing my own super, I earned more income than the previous 5 years combined. Isn't that crazy? And so this strategy you can absolutely do in your own superannuation. Now, I'm not saying you have to do that, but if you learn this and master the skills, absolutely it's something I do for myself. So, I practice what I preach. Now we're going to delve into options. So we've talked about the stocks, we've talked about ETFs. What are these options contracts? These can be quite confusing, especially when you start out. So on the right-hand side, we've got a contract. And I'm going to use property as an example because most people understand property. So to keep it simple, I'm going to effectively share property. So I'm getting a call. I'm just going to end up anyway. I'll send it to voicemail. So one of the examples is here, Anthony Bonitzer. He's the property owner, and he agrees to me. So let's imagine I knock on Ant's door, and I say to him, Ant, I love your house. I'm going to give you a contract that says I'm going to buy your house, Ant, for $1.1 million. And I know for a fact, looking at the market at the moment, your house is not worth any more than $1 million at the moment. But I'm going to give it for you for 1.1. I'm speculating that your house is going to go up. And in return, Ant, I'm going to give you $10,000 cash check right now to have control over your property for the next month. So I can purchase your property for $1.1 million over the next month. You can't sell it to anyone else but me, Greg Yellis. And I'm going to give you $10,000 cash that you keep guaranteed up front, but you can't sell your property to anyone else in the next month, except to me for $1.1 million. So that means if your property, Ant, goes to $2 million in the month, guess what? I'm rubbing my hands and I buy it off you for 1.1. Right? If your property stays the same, well, my contract expires, we rip it up, and you can feel free to sell it or do whatever you want for the coming months. So why would I do that? Well, me as the Greg, I'm speculating. Maybe I know something about the market that he doesn't. You know, maybe I'm happy to pay him $100,000 because I can go to DA, council. I know there's some plans in the area that the property's going to shoot up, whatever it may be. But that's an options contract. And so if we look on the left and the terms of those contracts, options are contracts giving the right. And we look at it, stocks, to buy or sell a stock at a fixed price, called the strike price. That's the term called. So that 1.1 million in the property example is the strike price. The contract only lasts for a specific period of time, and that's known as the expiry. And it can be as short as a few days, a week, months, years, but it always has an expiry date as part of the contract. So that is a high level to the contracts. Now, remember, if you've got questions, there's a little bubble up the top there, the chat thing at the top. You can put your questions in there, and we will save many time at the end for questions. But I will be going through more and more examples of these options contracts. So a little bit more deeper into the high-level intro to options. There's only two things you can do with these contracts. You can either sell them or you can buy them. Now, why is the seller? What does the seller want to do? Well, they're creating or selling the contract. They receive that income. So similar to Anthony, he received that $10,000 from me for the property. But now they've got an obligation. They might be obligated to either sell or buy a stock in the future. Now, the sellers is something we do as part of the strategies. And I'm going to go into showing you how that's done. Now, why would the people buy it on the right? Well, I call them more the speculators or the gamblers, if you will. And I call the sellers on the left more the casino or the house. You know, they say the house always wins. Well, the Chicago Board of Options Exchange, which manages this since 1973, the statistics are around 80% of these contracts expire worthless, meaning the speculators on the right never win 80% of the time, whereas the buyers are winning the sellers are winning 80% of the time. So this is why I say it's the house versus the gamblers. And so the option buyer pays a fee or premium to buy the contract. They now have the right to buy or sell a stock at a set price. And they hope the stocks move in a certain direction. So why more? So speculation. So people can use options. And when I first learned options, I was in the speculation game. I spent 5 years from 2001 to 2006 buying and selling call and put contracts to be able to speculate, make money up, down, or sideways. Again, I made a little bit of money, but it took so much time. I had to chart, use technical analysis. Look, I learned a lot, sure, but it wasn't simple. It was far from simple. It took so much time, and I really wasn't making that much money from it. People use it for leverage. Now, one of the things with an option contract, you need to have, it controls 100 stocks. So for every contract, you now control 100 shares. If you have 2 contracts, 200 shares. 3 contracts, 300 shares. 4, 400, and so on. People also use it to buy time or lock in a buy or sell price. And people use it as a form of protection or insurance. And we definitely do that as part of our strategies, which we'll share later on. And people can use it to earn income. So for us personally, we're using the bottom two here when it comes to options and our strategies. We're using it definitely to earn income, and we're using it to protect our capital, right? Because one of Warren Buffett, who, if you don't know him, he's one of the greatest investors of all time, his number one rule is never lose money. And his number two rule is follow rule number one. And so we make sure we can sleep well at night by protecting our income. So again, moving more into the options, there are two types of options. You've got a call option or a put option. And you can either do two things with those. You can buy them or sell them. So that's it. They're the only four combinations. Now tonight, we're really going to just focus on one of them, selling the call contract. But I'm going to go through quickly here what each combinations are. So for the call contract, it's the right to buy the stock from the seller, right? That's what a call contract is. So why would they want to do that? Well, in this case here, they're buying the contract just like I did with Answer the Property. I spent that $10,000 because they're speculating the property is going to go up. I'm locking in a buy price here. When I buy that call contract, I lock in my buy price. So I'm hopeful, I'm gambling, I'm speculating that that's going to go through the roof. Now, the buyer of a put contract, it's the opposite. They now have the right to sell the stock to the contract seller. So why would they want to do this? Well, we use this to ensure we're locking in a sale price. So as an example, let's say we've got a stock at $50 and we lock in that sale at $50. If that stock in that contract expiry term dropped to $10, well, guess what? We can put the stock onto someone. That's why we call it a put. We can put that stock onto someone at $50. We've locked in our sale price. So we say put, you can put that stock onto someone. So effectively, it's your insurance when you buy that put. Next, we can now sell a call contract. And this is the potential to sell the stock to the contract buyer. So this is when we sell this call contract, we now are collecting income. And we use this to collect income. We're locking in our sale price, our potential sale price, and we're capping any potential upside, any capital gain. But the trade-off here is, and we're happy to do it, is we get that instant cash flow. And that's why we sell those call contracts when we own stock. And don't worry, we're going to go through some real-life examples. And we can also sell a put. And I won't spend too much time on this, but this is the potential to buy the stock contract, buy the stock at a set price from the contract buyer. Now, for a bonus for showing up tonight, if you go to options4.com.au/ebook, you're going to learn a bit of therapeutic writing. Now, I'm not a best-selling author by any means, but I put a book together that was therapeutic, but really it was the 5 things I learned from losing over $250,000 in the stock market by doing the opposite things of what I'm teaching tonight. I got greedy. I could only see the stock market crashing. I changed my strategy, things that had worked for me for over a decade, and I paid the price. I did a lot of things against what I know. And the reason for me sharing this to you is that not everything's rosy. With these things comes great responsibility. You need to put them and be conservative at first. Practice them in virtual trading accounts. Protect your income. I did everything against what I did for well over a decade and everything against what I'm teaching. And so if you want to read what not to do and what I definitely don't do now going forward, so I got slapped in the face massively by the market, then read this ebook. And it's a bonus for you guys joining tonight. But the psychology part is so critical. And so now once you've got a bit of a, as I said, this is a crash course tonight. It is only 90 minutes, but you've got a bit of a foundation around stocks and ETFs and call and put options. We're now going to head straight into the profit. So we've done a bit of a crash course on principles. We're going to head straight into the profit because we've got, again, not much time to go through everything. And so we're going to go through the SOAR to income. But effectively what we're going to talk about today is just the S in SOAR to income, the selecting the right strategies for you. And so we're going to be just focusing on one of those strategies, which is covered calls. And so what is a covered call? And we go through that in quite some detail. So we're just going to be focusing on the bottom left quadrant and selling call contracts on stocks or ETFs we own in lots of 100. Now, why do we do this? What is selling covered calls? Well, Again, this is what that example that Peter Stanley told me in that Sydney Entertainment Centre. It's like having a property. We own a property. We put a tenant in it. We get rental return, right, every single month. This is the same kind of analogy. We buy a stock. It's covered because we own that stock. We own that asset, and we own them in multiples of 100 shares, right? One contract equals 100 shares. Two contracts, 200, so on and so forth. So it's covered because we own the asset. Just like the house, we own the stock. Why rent out your property? Well, pretty simple, right? You just don't want it vacant because you want cash flow. And we sell core contracts on that property, on that stock, to generate income. Now, it's just like rent because we choose to choose them on, say, 30-day terms. Remember, we can choose that expiry date. So we can do this every 30 days to generate income, month in, month out. And I did this for well over a decade. And the power of it was amazing. And you'll start to see that when we show some real-life examples. So we use it to generate income. So this is our rent for our stocks. We trade. So when you sell a core contract, we cap our gain, which you'll see in an example coming up. So we're not in it. So some people buy and hold stocks for the speculation it's going to go through the roof. They think, I'm going to make 1,000%. This strategy is not about that. This strategy is about bird in the hand. It's about, you know what, I'm going to sacrifice potential upside because we don't know. We don't know if the market's going to go up, down, or sideways. We've got no idea. Yet we can make income, guaranteed income, month in, month out by selling a covered call. We also do it to reduce our cost basis and risk. Because let's say we buy a stock for $30 and we generate $1 of income a month. Well, after 12 months, that's $12 of income, and we've now really only own that stock at $18. We've reduced our cost by $12 by generating that income. Whereas if we just bought that stock and held onto it, we ride the waves up and down. No matter what that stock does, we ride it emotionally or whatever. Whereas if we write covered calls or sell covered calls, we're generating that consistent income. Why I love that covered calls is it's quite simple. You know, you can start with this with zero money. And what I mean by that is you can do it in a virtual trading account. You can test this on the real market by using play money. Second, it's once you understand it, how to use it, it's very easy to implement, simple to do. And third, you can start as little as a couple of $1,000s. It's very different for property where you might need hundreds of thousands of dollars to get started. With this, you can start with a couple of $1,000s, and it doesn't take much time. Yes, in the beginning, everything takes time to learn it. But fortunately enough for our members and for those doing the Options for All course, we break it down step by step to ensure that it is simple to learn. It's not a hard barrier to learn. You know, we've put over $30,000 of courses I've done over nearly 2 decades of learning this stuff to try and make it as simple as possible for you to absorb. But again, as I told you at the beginning of the call, don't trust me. You may not know me on this call, you may know me, but independently, this Huffington Post article. Let's read what it says. One of the techniques used by Wall Street insiders, remember how I said this is the secret that no one knows? Insiders. Why is it insiders? I want to break down that. I want to get it to you, everyone. Is to generate guaranteed income. Is selling or writing covered calls. This simple technique is well known to the institutional trader, yet remains hidden to the self-directed investor. It's lucrative, even considered easy by Wall Street standards. In other words, you don't need to be sophisticated to master this. But one of the things they write here, however, in order to do this, acquiring the right education is vital. And I can't stress that enough. I'm a firm believer in that. Invest in yourself before you invest any hard-earned dollars. And I'm testimony of that. Ant shared in our story set up this business. We invested close to $15,000 in courses on how to build businesses, how to build educational courses, how to build our mindset for business. I did that because I know from my past history of investing, you need to invest in your knowledge. Knowledge is the key. Knowledge is power. The strategies are easy once you have the knowledge. So now I'm going to start giving you a quick example, and we're going to go through a couple of examples. So we did the house example, right? I'll repeat that again. I gave Anthony $10,000 to lock in $1.1 million buy price on his property that was currently worth $1 million, right? Why did I do that? Well, me as the buyer of that call contract, and that's a call contract in this case, I gave him $10,000 for the call contract on his house. I did it because for whatever reason I was speculating. I was a gambler. I was a risk taker. It was a bad day. I was just seeing the beauty. I thought the property market was going to double in the next month, and I wanted to get in, and I wanted to only spend $10,000 instead of $1 million today. I wanted to see what happened, and I was happy to risk $10,000. That was me, the buyer. Why did Anthony accept it? Man, he was living in his property. He's going, this is happy days. I've got this clown, Greg, knocking on my door. He's giving me $10,000 to buy my property at $100,000 more than what it's worth right now for the next month. This guy's an idiot or something. I'm going to take his money before he runs and goes to another house and offers it. I don't know. But he just takes it, right? It's great. Like, who wouldn't want that? Someone comes to you to offers you cash to lock in a price, well above market. And so that's the house example. Now let's do it to a stock example. Let's say options for all. We believe by taking this to the masses, and it's our mission to do so, we end up listing it on the stock exchange. It's not there yet, so don't go looking for the stock ticker OFA, but it's on the stock market. The shares are currently trading at $20. Right, so I buy the shares. So I buy 100 shares of the stock market. Now there's an options for all March $20 call option, and I wrote this a little while ago, but expired in March. Let's just call that May. Edit that to say it's May. And we get a premium of $1. Great. So if I sell this call contract for the right for someone to buy OFA stock at $20, which is the market rate right now, I own it at $20. I'm happy to sell it at $20. I get $1 income instantly. So what's that? 5% income for the month. Great. But now I have the potential obligation that at the end of that month to sell options for stock at $20. So now we have the potential. So when that May comes, not March, but when that May comes, we have the potential for the stock to get called away from us. The obligation to sell if those shares are greater than that $20. So effectively, I've capped my sale price for $20, just like Anthony capped his sale price for $1.1 million for the property, for that instant income of $1 per share in this case, that $100, if it's 100 stock, it's $1 per share, $100. So if we bought 100 of these shares for OFA stock, it'd be $2,000 investment, and would earn $100 a month for that investment, just like Ant earned that $10,000 for the month on the property. So now what I'm going to do is I'm going to break this down versus more property versus stock examples. So what we'll do if we did this as a live 90-minute presentation when we do this, we'd divide the room equally, some on the stock side, some on the housing side. I'm taking the stock side because I know the answers here, but some of you might take the housing side, and that's perfectly okay. Some people are just scared in the stock market. They don't want to invest in their knowledge, and for whatever reason, they just love property, and that's fine. I love property too. I've got to invest in property as well. And so when we look at the example, let's use house rent as an example. And I'm going to try my best here to make this the shining example, the best example. Because what I don't want you to do is go, Greg, you made the stock market one look so much better and the house one crappy. And so, of course, it's going to look better investing in the strategy because this is what you're selling in this course. So I've done the opposite. I've gone, you know what, let me make the house example ridiculously good, and I'm going to be conservative on the stock example. I'm sure that's okay with you. So let's do the house example. Let's say we all have $200,000 on this call. I've just gifted you $200,000 cash, and you want to buy a property. Now, you've got that as your deposit now, right? And we don't want to do lender's mortgage insurance, so we're going to use all of that as a 20% deposit. Great. So we can buy $1 million property. Okay. Now, even better, I'm going to use rental yield of 6%. Now, I've got $1 million investment property at the moment, and I reckon I'm netting about 3.8% yield. So 6% is really, really good. So we're going to say $60,000 income per year on this property, renting it out. Fantastic. Happy days. Now, this is absolutely good, right? And now I'm going to use $60,000 as your income. So the people that are investing in the house example, you're earning $60,000 a year in cash flow. But what have I excluded? No maintenance, no toilets breaking down, no plumbing, no electricity, no call-outs, no tenancy complaints, no estate agent fees, no vacancy rates, the place being vacant for several weeks, no insurances, tenancy insurance, house insurance, content insurance, no mortgage. The mortgage in itself for the $800,000 is going to eat up a lot of that income. I'm not even including the mortgage. I'm giving you a high yield, 6%. No legal costs, no stamp duty, all of these things. I'm going to use $60,000 a year, but as you can see, that $60,000 a year is pretty ridiculous when you actually look at all the things in there. But let's use $60,000 a year on that $200,000 deposit. Hopefully everyone's okay with that. Now I'm going to go through a real life stock example. I'm going to spend a bit of time on this because it's showing a real life screen capture from our trading platform. Now, when you first look at this, don't be scared and jump off the call, because I know it could seem a bit daunting and a bit like the Matrix, but I'm going to try and break this down for you as quick as possible, and as simple as possible. This is known as an option chain. This is our marketplace to trade our options contracts. Now I'm going to break down this trade. I'm going to break down what's on this screen very slowly, and I'll try and repeat it as well. Up here, what do we have in this options contract? We have the stock ticker, which is known as TWTR in this case, which is Twitter. Now, what I'm also showing on this screen, don't take it as a recommendation from us, as I said, it's for educational demonstration purposes, although I do personally do trades in Twitter, but this is not me telling you to do this trade. I'm just using this to show a real life example. Great, so there's our stock code, Twitter, TWTR. And for those of you that don't know Twitter, these are people that can tweet like a text, but on the internet. Yeah, it's a global company, and they've been doing quite well recently. Next, we have the current stock price. Now, this is 2 days old, so this was the close 2 days ago when I took the snapshot, so I think it changed and went down a little bit overnight. But regardless, for this purpose, it'll do. It was 2 days ago, and it closed at $32.04. Next, we're only going to focus on the call side. Yes, you see on the right-hand side, we have the put contracts. Let me just get my little buzzer thing here. So what I'll show you here is we have the put side here. We're not focusing on that. We're focusing on this call side here. Great. Next, we have our expiry terms. You see all these tabs here? We have expiries, and we can add more as we go. I'm actually just using 18 days. It's actually 17 days now, or 16 days since this is done. But I'm going to do till May 11th. I'm not even going to do the full 30 days. Remember I told you I'm doing this conservatively. I'm going to give you worst case figures here. Okay? Great. So 18 days. Fantastic. Next, we have these strike prices. This is the price we lock in. So just like that property example with Anthony, we locked in that $1.1 million sale price that he had to sell to me for, the guy that gave him the $10,000 premium. This is the contract expiry we're using here to lock in. This means I'm locking in my potential capital gain at $32.50. I'm buying at $32.04. I'm locking at $32.50. Now, I could use the 32 strike price because it's pretty much where it is now. I could do that and lose maybe 4 cents, potentially lose 4 cents a share. But I want maybe a little bit of capital gain too. So I'm going to put in this strike price at $32.50, which means when I sell this call contract, the person who buys it has locked in a potential buy price of $32.50. So if Twitter goes to $50 in the next 18 days, I have to sell at $32.50. That's the agreement I signed up for. Now, why do I do that? Because I agree to get a premium. And this is why it's called a marketplace or the option chain, because we have ask, which is me as the seller. This is what the sellers are asking per share to receive from Twitter for the next 18 days per share, per stock. The bidders are the askers. So think of this as an auction. The bidders are the people on the grass in your property, throwing up, yes, I'm going to bid you this for the property, bid for this property. And this is the vendor or the owner of the property, the auction, going, no, I'm only going to accept this. This is my reserve price. So this is the bidders and the askers. The bidders and the askers. Now, in this case, I'm the seller, and these are what the bidders are willing to pay for per share right now, live. And again, this was a couple of days ago, but at that time when I took this snapshot, this is what the marketplace was paying. So now let's do some trades. Okay, remember, one contract equals 100 shares. So I go out and I buy 100 Twitter shares. I buy my house. I buy my asset. That cost me just over $3,200. Fantastic, I got Twitter. Then I go and sell one contract that expires May 11th, 18 days time, at a strike price of $32.50. We execute this in a trading account. We receive $2.37. Why did $2.37? Again, I'm being conservative. Usually you'll get filled somewhere in the midpoint. I've just made it a bit closer to the $2.35 where the bidders are. So we receive $2.37 per share times 100 shares or stock, and we receive $237. That's 7.4% return for 18 days. Not 30. So we had 6% yield for property. That's 7.4% for 18 days. That's right. This is the power of options. But remember, we didn't have $3,000. We had $200,000. That was my task. Property room at 200. So we have 200 from the stock market. We can't be sold short. So we buy Twitter, and 6,200 shares of Twitter now at 3204 equals 198K. Hey, guess what? I've saved you some money. You're not even using your full 200. You got $1,300 to go do what you want with. The other example on property, you knew you had to spend way more than 200. Conveyancing fees, legal fees, stamp duty, but we didn't even go into that. We just gave you that best case. We're getting 60 grand a year from property. Great. We know that's rubbish, but great. So we buy Twitter. Then we sell 62 contracts at $2.37 at 6,200. We would receive $14,000, just over $4,500 for 18 days. I could do this in as little as 5 minutes. This would not take much time at all. Of course, I know what I'm doing. But this shows you the power of options, the power of the covered call strategy. Now, what I'm going to do here is options contracts and these premiums change with volatility. The more volatile a market, the higher they are. The more low volatility of the market, the lower they are. Now, this is a high premium return for Twitter. And why I know that is because earnings is coming up over this period, over these 18 days. So again, I'm going to be conservative. I'm going to halve it. And I know for a fact I've been getting more than, 3.7% return for Twitter myself. So halving it is conservative. So I'm going to halve that. So again, this is what you really would get. I'm halving it. And you only get just over 7,300 for 18 days. Now, if we annualize that out, right, over 365 days, this half of this amount, we get to $148,000, just under $149,000. So this would be the cash flow, projected cash flow on this strategy versus $60,000 on the property market. This is the power of options. Now, what I'm going to do is I'm going to break down this trade. Now, what happens post this? Because, of course, something has to happen on May 11th, right? Well, let's deal in. We bought 6,200 shares at $30.04. We sold 62 call contracts, receiving $2.37 per each individual share. We got $14,694. May 11th arrives. A few things can happen. The stock of Twitter is now greater than $32.50. The stock gets called away from us automatically at $32.50. And so we end up selling our shares. We gave away that right for this instant income. It gets traded away from us and we receive $201,500 in our trading account. Automatically May 11th because the stock's now over $32.50. We forgave all the rights for capital gain above that. We capped that. But great, right? We now get our capital gain because we bought it for $198. We sold for $201. We also get capital gain, $2,852. So our profit for the 18 days now is our original instant income we got up front, our guaranteed income, plus the capital gain, 8.8% for 18 days. Again, even if you halve that, 4.5% for 18 days. This is the power of it. And this is why the big banks have been using this since 1973. That's right, you heard me, 1973. And you're only hearing about this today. What happens if the stock's flat? And again, why I love this strategy, guess what? The contract just expires, like that 80% I talked about before that expire. We go and sell another covered call, create more income, and away we go. We do that month in, after month, after month. The profit in this case, nothing changes because we just sell another covered call and then we create more profit and income after that. Now, what happens if the stock is down but greater than this 29.67? Now, where did I get this figure from, 29.67? Well, I got it from because when we bought Twitter at $32.04, we generated instant income for $2.37. If we minus $32.04 from $2.37, we get $29.67. So why is this figure important? Well, the other powerful thing about options is we get a discount automatically of what the market buys the stock at. When I did this, if I could do this trade, get my break even, meaning we never lose or make money. If I sold Twitter at 29.67, even though the current market's at 32.04, I never lose or gain money. I've reduced my cost. I've reduced my risk. So if the stock is down but still above this figure, we're still in profit. We're still making money. We go and sell another covered call, go again, and do it again. Now you're probably thinking, what happens if it goes underneath our break even or plummets even? Well, again, we've got strategies in place. We can use some of this income to fund or buy those put contracts to ensure and lock in sale prices. Now, we haven't got the time on this call to go through that detail, but we either manage it through our scan in our post, in our 6 P's to Passion of managing and reviewing our positions and managing them, or we can just protect our asset. So if it does plummet, we've locked in our sale price. And guess what? We've been paid for the privilege to do so. We just take some of this profit and we pay for our insurance when we enter the trade up above. So we've got everything covered. So I'll just go through this one more time, just clearly. We bought our shares. We sold our call contracts, received our income. We sit there, we wait. May 11 arrives, where the expiry is. The stock's greater than that. The stock gets called away from us automatically. We end up selling our stock. Capital gain, profit for 18 days, great. Now, if we want to re-enter that position, we just rebuy the stock again and go again. Or we buy another stock. If we've done our planning and we have our stock selection done, which is what we teach our students, again, great. You just go in and enter another stock and away you go. Stock is flat, rinse and repeat, rinse and repeat. Keep creating that income, reducing our risk, reducing this break even down and down and down. And this was the power of the strategy. I looked at the numbers when I first saw this, and I just realized if I just kept doing action, I would pay off that whole asset within a couple of years, 2-3 years. If I'm getting between 2 to 4% a year, within a couple of years, I've paid off my whole asset. I've doubled my income. I looked at the basic, simple maths, and that just made absolute sense to me. The only key thing was to make sure I chose the right company that wouldn't go bust. And the great thing with ETFs is you can, when you're a beginner, we teach some of our students, you might even just go to an ETF. Yes, the returns might be slightly lower because it's less volatile, but you're safer because it can't go bust. So there are many different ways to suit many different people. But again, don't just believe me. Here's a graph. Remember earlier I showed the Standard & Poor's, the S&P 500, and I shared that SPIVA report, which showed it outperformed over 92% of all the fund managers. These are the so-called geniuses. Over the last 20, 30 years, if you just bought the S&P 500, the ETF, the exchange-traded fund on the top 500 companies in the US, you would have outperformed 92% of them. What this graph shows here, this is the S&P 500, the SPY. As you can see, it had a big dip, GFC, came back up. This top line here is done by the Chicago Board of Options Exchange, showing if you just did a monthly covered call on the SPY throughout time, since 2010, through GFC. See, you didn't get that dip there, did you? No, you didn't. Actually, you got a little bit of a dip, but much lower. And your ups and spikes are a bit capped too, because obviously you're capping your upside. But look at the outperformance of just owning the SPY, which already outperformed 92%. Just writing consistent covered calls on it, you well and truly outperform the SPY even again. This is a no-brainer if you want to generate income on the stock market. And so again, don't even trust me. This is coming from the Chicago Board of Options Exchange. So we mentioned before, I'm going to get right into acquiring the right education. Education is vital. And we believe at Options 4, again, is you invest in yourself before you invest your hard-earned money. So I want to just take you through what we've done and why the well over a decade of my own trial and error of several courses spending over $30,000. And tonight spending courses. You know, this e-learning platform, we've invested over $250,000 of time, money, and systems to make it step-by-step, simple to do, in bite-sized chunks, to be able to learn the system and not make the mistakes that many people have made, and even including myself. If you stick to this step-by-step, you will learn the key skills. Along with that e-learning platform that you can do on a smartphone, a tablet, we do recommend on a desktop, you get a course workbook. I was speaking to one of my members today, actually Sam, and I was asking him, he's completed the e-learning and he's pumped for the 2-day workshop, which is coming up in the end of this week, on Saturday, Sunday this week. And he was saying it was so simple. He goes, I'm trading, I'm doing trades, and I just followed it step by step. You guys made it bite-sized. And he actually was sharing that he did a financial management course, and he learned options through that course, and he had no clue. So he had a university degree, they were teaching him finance, and he couldn't figure out for the life of him options in the stock market. So I was happy to know that all this investment we've done is paying off in our students. We then also have a 2-day workshop. Our belief is if you're sitting behind a computer screen doing the e-learning, you're doing it in the workbook, often you need to be immersed in an environment. You'd have people holding you accountable, holding your hand, showing you step by step, sitting with you, getting you to do the work, getting you to do the trades, reviewing the trades in a full immersive 2-day workshop. And that's what we're doing this weekend, and they'll be coming regularly every few months. And so as part of our course, you get access to the 2-day workshop. Now, it doesn't stop there. We also give you 3 months of phone support, right? So if you need support, and post that, we have a monthly subscription for support, community forums, phone support, webinar tools, etc. And we take you through all the 6 Ps to passion. So once you've got the money out of the way, what are your passions? And it's really important for you to uncover yours. And now I just want to share a bit about my passions, because this is what keeps me going, keeps me motivated, is my family, right? And as Ant said, I've got 3 beautiful children. My youngest just turned 3, my eldest just turned 14, middle son Aiden's 11, and I just love spending time with them. And this is my passion, is my family. And what makes me great is I've actually got Leah attending and helping out at the 2-day workshop, who's my eldest, on the weekend. I'm pumped to be able to pass on knowledge to my children through this, that they will have a skill that they can pass on to legacy to generation and generation. You probably heard that saying, teach someone how to fish and they can eat for a lifetime. Well, I believe if you can teach people on how to teach people to fish, you can solve world hunger. And so that's what Options 4 is about. It's bigger than Ant and I. We want to open this up, to the world, and we're really passionate about delivering it. And so it's more my wife and kids in the pool, just mucking about. My wife, who's been my biggest saviour, and you'll hear about her in the ebook, she keeps me on track, she keeps me accountable, and she unlocks ideas before I've even thought about it. I love being active. I love climbing stupid, ridiculous mountains, as me in base camp at Mount Everest. I've fallen in a crevasse before. It's probably a question you can ask me. I nearly died, but someone saved me. But hey, I love doing crazy things. I love to push myself outside my limits. Also, me and Ant, right, we have so much fun building this business. It really is a mission for us. And, the journey we've been on, the ups and downs to get us to this point, we're so excited and to bring this to us. And we do crazy things in team building ourselves as part of Options 4. We did some canyoning recently. Ant nearly broke or lost his hand in the process. You can see some blood there. But we do a lot of fun as well, because we believe that, business should be fun. And so we like to do some activities as well as part of this. But enough about me, what are your passions? And we want to help those that want to get started and take action to their passions. But before we do that, how do you think? I can already have a feeling of how you think because you're on this call today. But I saw this from a multimillionaire, quite a long time ago, well over, I think, 15 years ago. His name was Brad Sugars. He's actually a New Zealander, actually a Kiwi. And he shared this with me, and it was really profound, and it really made me question every time I think or make a decision or a choice, I review this. And I share this with my kids now because it's quite simple and I love it. But how do you think? And I've got a feeling of how you think because I know you're on this call and you're taking action. You're investing your time in your knowledge. But are you a person that blames others, blames your circumstances, blames reasons why you can't do things? You make excuses. You go, I can't do this. It's not for me. This all seems numbers. I don't know maths. I can't do this. I don't have the time. I work too hard already. I can't use the computer. Whatever the excuses are. Or you're in denial. I'm going to get there anyway. Maybe now's not a good time for me because I'm doing this, blah, blah, blah. It'll be 3 years' time. What I love about this acronym, and hopefully remember this forever, is you've probably heard the saying, you've made your bed, now lie in it. And that's why that BED is there. I believe if you think below the line, you've made your bed. You lie in there. And you're a victim. You're a part of a victim mentality. You're making blames, excuses, and denial. And if you stay in that, you're going to be in that bed forever, and you're never going to be out there attacking life. Instead, where we want you to be is, taking ownership. You're someone that takes ownership and realizes, if it's to be, it's up to you. I say, if it's to be, it's up to me. If I want to change my outcomes, I have to change my behaviors, my thinking, my actions. I need to hold myself accountable because no one else will hold myself accountable as much as I will. I need to be responsible for my actions and my outcomes. And if you are on that top, and I believe you are, if you're on this call, you absolutely are. Well, you've got an oar and you're rowing yourself to success and you're a victor. And so I firmly believe the people we want as part of our team and members of this, we want them to be victors. We want them to be rowing that oar to success. But in order to do that, you need to have the begin with the end in mind. 2 to 5 years are going to go by regardless. You need to see where you're going to be at the end of this year. Are you just putting your head in the sand going, things will get right, I'll pay off this debt, I'll eventually buy a house, I'll eventually do this, I'll eventually, and that time never comes. And you look backwards 5 years and go, wow, that 5 years flew. Because time flies. I can't believe we're already nearly in May. Right? And I remember Christmas and New Year like it was last week. Time goes by. So think about the outcome you want to achieve. Think about those passions you want to achieve. And start thinking about, are you taking action? Are you making choices to get closer to that outcome or further away? You need to begin with the end in mind. And one of the things I say is, stop investing all your time building other people's dreams. It's time to invest in building your own dream. Your dream is bloody important. We're all unique. We all have unique capability and skill set, and your passion is for you. And what you can do and help and deliver in the world and outcomes in the world matters. You matter. And so stop giving all your time up to other people's dreams. Start investing in your own. Build you incorporated. And that's what Options for All is all about. Options for all. Now, cost of education. I remember going through the cash flow quadrant and the E quadrant. And a lot of people train their time for money, right? Education. If we look at costs of education, I got this from the Australian Bureau of Statistics. Just for everyday education, you're spending between, on average, $8,000 to $30,000 for just school. If you're doing English courses or other kind of practical courses, between $15,000 a year. Vocational training, certifications, diplomas, between $4,000 and $22,000 a course. Undergrad degrees, $15,000 to $33,000. Postgrad degrees, $20,000 to $37,000. Doctoral degrees, $14,000 to $37,000. This is a lot of money. Not only that, it's a lot of time. And at the end of all these courses, and at the end of all this time, what have you bought? You've bought yourself a job. Swapping your time for money. That's a lot of investment of time, money, and effort to then spend more time, money, and effort and see no light at the end of the window. Now, if your job is your passion, then so that's great. But still, I do believe in multiple streams of income. Even if your job is your absolute passion and you invest this money, time, and effort to get there, and you love spending your time at your work, then great. This does not take much time. For as little as an hour a day, you can learn our whole course in a month and get to the end, do the 2-day workshop, and be able to be on your path and spending less than an hour a week. So this is the first step. What do you get as part of the e-learning course? You get our interactive e-learning platform. As I said, we invested over $250,000 in the platform and the course workbook. We also have a 2-day immersive workshop. Again, valued at $2,000. That's a 2-day full workshop. We've got one coming up at the end of this weekend. So if you're an action taker and you want to be on that this weekend, we probably only have one spot left, I think. But anyway, you may be on that one. If not, they happen every few months. We have an OFA community forum, Options for Community Forum, where you hear from other members, questions and answers. We also do live webinars. Plus, you get 3 months included of phone support, value of $1,000. Our stock picks, our top stocks and ETFs we're picking and we're using. Monthly webinars, right, where we do Q&A webinars. We get all the questions and answers from our members, and we do webinars back to our memberships. And also, this is the one I find gold, because with all the courses I did, I wanted to see people's trades. I wanted to see the people that were teaching it, their trades. And they never showed them, right? Except for one guy I know that I've done his course and he shows them, but very few do. So we're going to do follow us trading. We're doing this ourselves. And so I'm not even doing this myself. I'm doing it for my trust, my super, my dad, my mum, my sister. I'm happy to share it. So follow us trading. You'll get every week Ant and I's trades of what we're doing live to be able to get this. So you can learn, and when you're doing this in your virtual trades, you can copy them at the beginning if you want, right? Until you get confident and competent in doing your own skills. The total value of this is over $10,000. As we saw for the cost of education previously, to get a job, I personally believe this is well over $10,000 value. We just showed you in a trade in Twitter how you could pay for this course and some in one trade. If granted, you need $200,000 invested, but you can see the potential. All of this for just under $5,000 inclusive of GST, right? Which to me is amazing value. You know, I've spent $10,000 on one course, $6,500 on another course, and I've not seen it as simply broke down and the value that we've delivered in here for over nearly 20 years of experience, over $30,000 of courses, and over $250,000 invested. So also this price, again, I'm not an accountant, I'm not a tax advice, but I know with all my courses, I was able to get them tax deducted because I was a high income earner, I was half of that back in tax. So again, you can look at those costs and potentially you can halve it as well and get half the back in tax because it's an income producing education. But again, I'm not an accountant. You need to take that advice from your accountant, but it's something I've been managed to be successful to get tax deducted on in my previous courses. So we're going to give you a bonus for tonight only. We're not reducing the cost because there's far too much value already in there. But what we will do is instead of having a 3-month course, 3-month bonus of monthly video updates, our follow us trading, our phone support, our stock picks, our 90-minute, we're actually going to add in 90 minutes of OFA founder time, which wasn't included. So you get 90 minutes with Ant or myself going through your particular trades, what you're doing, your strategies, your goals, your plan, everything you're trying to do. The value of this is $1,500. Usually after the 3 months, it's a monthly subscription of $79.95. We're going to give people for action, if you're serious, acting tonight only, because it's already ridiculous value, $1,500 if you're ready to take action tonight. So what's next? Well, one, be honest. Be true to you. Is this right for you? This may not be for everyone, but if it is a vehicle for you, be true to yourself. Don't go, you know what, I'll put this off next year, next month, whatever. Because 2 to 5 years will go by regardless. Will you kick yourself that you didn't take action? Next, what options do you have? If not this strategy, then what? If you have another strategy that can throw off in simple, with at least cash, testing it with play money to generate 2 to 4% income per month, then fine, go for it. If you're happy to do that, then I don't know why you're on this call. But I'm assuming you're on this call because you don't have any other options. So if not this, then what? Then 3, if you're willing to take action and this is right for you, then you can hit sign up here. Now I'm just going to show you now quickly, before we break for questions, let's look at the time here, we've got a bit of time for questions. I'm just going to show you our link here. Whoops, let me just go back. So I'll just click on the sign up form here. Actually, I think I've already got it open. We have our take action offer. So as you can see, this expires tonight. So midnight tonight. The bonus offer has all the details I spoke about. You can apply for membership. You can click on this button here. It'll take you down to apply for membership. Lists everything here that's included and what you now get for a year instead of 3 months only. So value of $1,500 just for tonight only. So this will expire. Now, for those of you that do want to sign up but you don't want to act tonight, that's perfectly okay. You can click on our services option on our website. And again, you can apply for options there, options for course there. So again, you can apply for the course, has the vision course outline video. You can secure your place, shows you what's included. Again, it's a 3-month trial only. And there's an e-learning walkthrough that you can see behind the scenes of what you get with the e-learning course, what that $250,000 investment looks like. And you can apply for membership there. Now, I'll just go back on the Take Action page. Now, we've got about 13 minutes for questions. I'm now going to unmute the line. Hopefully that was all clear. Before I do, though, I want to pass it to Ant quickly. Ant, was there anything else you wanted to add before I unmute the lines for our people on the call?
Yeah, no, that's awesome. No, that's great. Go for it.